Hello, welcome. Thank you for joining me again for video number 3, posting transactions. We've already learned how to read the balance sheet and the income statement. We know debits and credits now, so now we're going to find out how to get all of our information onto the balance sheet and income statement. So every single transaction a business has flows through what's called a general ledger. This book right here. Now hang in there with me. We're going to learn the old-fashioned way so that you know exactly what your computer's doing and you'll be able to do work on any accounting software for any business, okay? All right, so let's get started in the general ledger. Inside the general ledger we have a chart of accounts. And your general ledger just consists of every single account that you'll use on your income statement and balance sheet, like cash in the operating, credit card payable. That is what is in the general ledger. Our chart of accounts shows just a list of everything that is in the general ledger. It's just for a quick reference. Now you can call your accounts anything you'd like. The most important thing is that you categorize them correctly. So you have to know what part of the balance sheet and income statement that they go in. All right, so now we're going to work with the examples that we did in Jack's business. The very first transaction he had was a $10,000 deposit. So to record that, we come over to the assets section, we find the cash in the operating account, and we record the date. The description was a deposit. The debit now is a $10,000 debit because we're in the assets section and we want to increase that balance. So our balance is now $10,000. Remember that every transaction has two sides. Our total debits must equal our total credits. So the other side of this transaction goes to the equity section. It's an owner's contribution, so it goes in that account, and we post the date, the description, and this time it goes in the credit column as a credit amount. So our new balance is 0 minus 10,000 equals credit 10,000. So we go to the next transaction, which was a sale. He had his first sale, and he made a $500 bank deposit. So we go over to the cash in the operating account again. We record the date, deposit, another $500 debit. So our balance is going to increase to $10,500. The other side to this entry comes over to the income section. And we record here the date, the deposit, and now it's a credit balance because all of our income section accounts are credit balances, and the balance is credit 500. Then we go to a purchase transaction. He bought $100 worth of supplies on a credit card. Jack gave us the credit card receipt, so we go to the liabilities section. We post under the credit card payable account the date, the description was supply house, the reference is just credit card. Now this is a $100 credit because of course our liabilities are credit balances. So the balance is a credit of $100. Our next purchase was a check for the utility bill. So we come over to the assets section, go back to the cash in the operating account. The date is 9/15. It was payable to our electric company. The check number is 1001. And the credit now is a credit of $200 because we want to reduce the amount in the bank account. That makes our new balance $10,300. The other side to that entry goes to the expense account. Expense section under the utilities account. The date, the description is our electric company. The reference is 1001. The debit here is $200 for a balance of $200. All right, so that covers all of the transactions that we have done so far with Jack. Now we want to get all of those balances that we have reported here onto the income statement and balance sheet. So the first thing that we do is transfer them over to what's called a trial balance. This puts everything on one page. It makes it easier to review and it makes it easier to check our balances. So we just transfer those balances over as they are, debits and credits. We run a tape on the debits and the credits to make sure they're the same. They are $10,600. Now on here we have a column for the income. We list the debits and credits here, the income and the expenses. We find out what our net income is so that we can check everything, make sure everything flows correctly. Our net income comes over to our current net income, and then once we post all of our debits and credits over here, the net should be the same $200 credit that comes over here. So that's all there is to it. We take these balances in the debit and credit columns, we transfer them over to our balance sheet and income statement, and again we transfer them over as debit balances or positive numbers, and we will cover any negative amounts that go in here in later videos. Now let's talk about what your computer does with the transactions that you download from the bank. If we come over to the asset page and the cash in the operating account, the computer will take care of all of the debits and credits here, but you need to instruct it what to do with the other side of the entry because that can change. So that's what the account box is for. You just need to put what account the other side of the entry would go to. Same thing with your credit card payable page, your account there. If you download your credit card transactions, the computer will take care of all the debits and credits in the credit card payable account. And again, you need to direct it to the other side of the entry. So that is it for posting transactions. Hang in there with me. The next video is going to be number 4, journal entries. So I look forward to seeing you again, and thank you so much for joining me.